Hey guys, Brad Rue here, helping you make financial decisions easier and simpler for your life. Today we're going to do a quick little video on the basics of a financial statement. You get all these investment statements in the mail. What's on them? What makes sense to you? What you need to know. Stay tuned. Hey guys, so today we're going to talk about basics of an investment statement, trying to read that statement that comes in the mail. For some of you it's monthly, sometimes it's quarterly, and what's all on that? What do you really need to know? How do you know if you're making any kind of money in your accounts, and so on. So today I'm going to just highlight a few things so you can be better equipped to read those things and make heads or tails of what you're actually seeing. The first thing I want to mention is that this isn't always included on statements. Sometimes it is, depending on, I guess, what fund company or where your money's held. But sometimes you'll see this number as a percentage of return. And to not like mislead you in terms of what your actual return is, we calculate this return a lot of times differently, and sometimes you'll even see the acronym behind the percentage return figure that explains what kind of return, average return, that they're using. And the acronym is usually TWRR. So you might have, 5% with TWRR behind it. And what that means is time-weighted rate of return. And you're like, well, okay, what does that mean? Well, it's different than just taking your ending balance and subtracting what you had to begin with and taking the difference, right? The average growth or loss in the account. Because what that does is it doesn't take into effect any money that maybe you added or withdrew. So for example, if you added, $10,000 to a $100,000 account, and at the end of your period of return that you're looking at, you're like, oh, I'm up $10,000. I made 10%. Did you really? No, you really didn't. You added money to the account. You didn't have any growth in your underlying investment. You just added a contribution. So to take out those effects of, miscalculations of taking money out or adding money over the periods of your investment timeline, you factor in each period individually and take an average of that. So it negates all those, changes to the account and really gives you the true return of the underlying investment that you're in, so you can make good informed decisions. So that might be on there. If it's not, take a closer look at the funds themselves. You can go online, or maybe it's even the performances reported in your statements, but you can find out what those returns are, and typically they're time-weighted rate of return. What else is on here? Well, you'll see a layout of all the things that you might be in. Mutual funds, exchange-traded funds, maybe individual stocks or bonds and cash. You'll see all of that on the one side, and usually a ticker symbol or some sort of a symbol showing you what that fund is. And underneath that, a lot of times it has an estimated yield. Now, this is where people get confused. They think, oh, this yield, right, is a stated percentage, is only how much I'm making my account. Like, I'm not making anything on this money. I have this yield of, 1% or 0.5% or 4%, and you think that's what you're making. Don't be confused. The estimated yield that those mutual funds or portfolios might state is simply the income that is generated by the underlying holdings. So it might be a dividend issued by the stocks in there, or it might be investment income coming off of the bond portion of the holdings, or maybe there's money market accounts in there that have a small crediting rate on them as well. And all that's calculated into an estimated annual percentage. So don't get confused what your funds might grow at, or an average return over time might grow at, because you see that little bit of dividend or investment income calculated as a percentage yield of what you would invest. And yes, it adds to your total return, is the real number, the total return that you're having, but it isn't the total return. It's just a small portion of that figure. Additionally, you'll have typically quantity listed too, along with the price, the last price of when the statement was produced. So you might have 100 shares, let's say, of a certain mutual fund or ETF or any of these things. And if you multiply that by the current market price, that should be how many shares you have times the price and how much value is in there. And when that value changes, it's not that you're losing shares, which is what some people think, like, oh, well, my market value went down, I must have lost money. Well, in theory, the value went down of those shares, but you didn't lose any shares. The shares are still the same quantity. And typically, as you know, investment income or things come into the portfolio, or you add more money to the portfolio, you're buying more shares at whatever the market rate is, or however, you know, the price of those shares is for your particular instrument, and you will be buying more shares. So the only time you ever really lose value in an account is when you sell those shares at a lower value, right, than when you purchased them initially. So there's typically the quantity, the price of the instrument or whatever you're invested in, and then what your value is, and then a gain or loss on that. And that should hopefully alleviate some of the confusion out there of what does my statement actually tell me, and what can I ascertain from the growth or losses on my account. And if you want more information about that, typically you can reach out to the company you're invested with, or look up the funds that you're invested in and see the actual underlying performance of those instruments to see, okay, yeah, this account went up, 10% last year, or nope, it's down 9% this year. And you can get some real values from that. So with that, guys, I appreciate you staying interested and in tune to what we're putting out there. Smash the buttons below if you don't mind, and see you next time.